Howdy, ladies and gentlemen, hello and welcome here to us at Nadex. My name is Philip and I will be once again your presenter for today's webinar. Today it's again the market movers. Today, of course, for the 20th of February 2018. Let me just change that slide here. I changed the slide. Hopefully you have seen the slide change. Please let me know in the questions box if you can hear me well and if you saw that slide change. So let me know if the audio and the video feed are working properly. Perfect, guys. Thank you very much. Really appreciate it. And now, as you know where that question box is, please, if anything is not clear, if you want me to explain things a little bit differently, if you have questions how I perform my analysis, please let me know. I want those sessions to be interactive, and for that reason, I really appreciate your questions. You are not interrupting my flow. I really appreciate you guys asking questions and making that session interactive. Today's session is scheduled to run for around about half an hour, and of course, before we get started, there are our usual risk disclaimers that I need to make you aware of, so please take a moment of your time to read through them and make sure that you're truly comfortable with them. Essentially, this says that trading, of course, involves risk and that you should understand those risks and the risk associated with the instruments you're using before you're getting active in the market. As neither Trade with Position nor myself are investment advisors, nothing that we say should therefore be considered to be actual investment advice. All examples are shown for educational purpose only, especially true for the main part of today's webinar, the live market analysis. I don't have a crystal ball. It's never a trade recommendation. I can only tell you guys what I'm seeing on that chart. In the end, you must have a strategy, you must own that trade, and therefore it's always your call if you want to put on a trade or not. It's never a recommendation from our side. So please make sure you're okay with this before continuing with the webinar. And that being said, let's have a look at the risk warning from Nadex. Nadex risk disclaimer: trading on Nadex involves financial risk and may not be appropriate for all investors. The information presented here is for information and educational purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Any trading decisions that you make are solely your responsibility. Past performance is not necessarily indicative of future results. Nadex contracts are based on underlying asset classes including Forex, stock index futures, commodity futures, cryptocurrencies, and economic events. Trading can be volatile and investors risk losing their investment on any given transaction. However, the design of Nadex contracts ensures investors cannot lose more than the cost to enter the transaction. Nadex is subject to US regulatory oversight by the CFTC. Now that we have the formalities out of the way, our regular attendees already know that agenda by heart. We want to have a look at the markets together. And we don't just want to jump into the market and decide if we want to be long or short in a certain market. We must have a plan. We should understand why we want to initiate a position. And for us, this plan is coming from having a trading strategy. And I want to analyze those markets together with you and highlight what I'm paying attention to when I'm looking for trading opportunities myself. So that's the major idea here. And sure enough, let's just directly jump into the market analysis here. And I would like to kick it off today with the good old euro against the US dollar. What is it that we can see here on that chart? Well, obviously, this has been an uptrend. It has been a nice and strong uptrend. How do I know it's an uptrend? I look at my highs and my lows. And sure enough, I saw higher highs and higher lows. And this is all that it needs for me to assess that this is an uptrend. No need for fancy indicators, no need for advanced charting packages. I just want to see my candlestick charts. Why candlesticks and not line charts? Because with candlesticks, I have 4 times the data points that I would have with just line charts, which show just the closing price. Candlestick charts allow me to assess what happened within one session. What did have to happen for that candle to look the way that it does? I see the price opened here and it shot all the way up. I got no small shadow here. It was really just, we opened at the close. Sorry guys, we opened at the low of the session, and from there on it was all buying and a lot of buying pressure, because price closed pretty much after a long green candle very near the top. I don't get that information if I'm only looking at the line chart. I must understand what happened, or what had to happen for the candle to look the way that it does. So I always prefer candlestick charts because they allow me to easily assess what has been and what had been going on within a session. Higher highs and higher lows, that market has been in an uptrend. Another indicator that I like to use to quickly assess what the big market move has been, or the big, not only trend, but what the general direction in that market had been. I want to look at my moving averages here. I have a 10-period moving average black, 20 blue, 50 red, and 200 green. And I like to see this fanning pattern here, which means they are well separated from each other. Compare this to what happened here during that sideways phase. The market didn't really make new higher highs and higher lows, or lower lows and lower highs. It was pretty much range bound. And sure enough, over this whole period here, you can see how close those moving averages were next to each other. Little space in between them. It's not really clear here in that section. Is the 10 now above the 50 or below? It's not really that clear. Compare this to what we saw here. Clear separation, fanning pattern, much clearer, stronger indication of a trend. So we made a high, we made a higher high, we had a pullback. That's okay. So the big picture is still up, right? Not quite. There are several warning signs here that tell me that something is not quite right, and that I don't really expect a lot of bullish momentum, bullish action happening here in the euro against the US dollar over the next few days. What's wrong? Well, first of all, price made a high here. We had a pullback. So far, everything was really nice. Then we made the next move higher to another new high. But guess what? While the close of that session here was definitely higher than any close that we saw here, sure enough, it wasn't a higher high. We fell we came very close to making a new higher high, but it didn't quite happen. Next thing to notice, we got a pullback, and this pullback took us way beyond our moving average buy zone, the area between the 10 and 20 period moving averages here. We dropped below this zone. Usually that shouldn't happen for a strong and healthy trend, at least here on that daily chart that we're analyzing here. I would like to see a pullback just like we saw here in the zone, and then the next move higher. And Fernando, thank you very much for that question. The moving averages are 10, 20, 50, and 200. The next question usually is, are we looking here at a simple moving average or an exponential one? It doesn't matter. You pick what you like best. I'm using those moving averages to help me assess how strong the trend is. And I help them to spot price equilibrium levels, my buy zone between the 10 and 20. And once you put both the simple and the exponential moving averages on your chart, you will realize it isn't that much of a difference. The location of those moving averages will be very, very close. It's not a big deal. Yes, the exponential ones will be moving faster. I have exponential ones here on the chart, but overall, it doesn't really change that much. So you try both and you see what you like best. Now, we had a pullback, a deep pullback here. And if we're really, really precise here, we would call this here a higher low. And next we had a lower high, and already we fell below this level here, and we made already a lower low. So at that stage, if you were really, really bean counting, you could say, Philip, at that stage, that's already a downtrend. Not sure if I would be so fast about it, but sure enough, the next high that we made, yes, that's still a higher high compared to this one here. And it's also a higher high compared to the previous one here. But just now, please have a look at what our indicators MACD and RSI had been doing. While price finally was able to make a new higher high, MACD clearly made a lower high. RSI clearly made a lower high compared to the previous highs that we saw. And this is called divergence. This is an early warning sign that something is not quite right, and that I like to use that picture of a rocket sitting on the launch pad. All boosters are go, and yet a small red warning light flashes up on the dashboard in the control panel, control room. And mission control says abort launch because something is not quite right. The pressure in the fuel chambers is not there. We will likely have a failure in the rocket engines, and this is what I'm seeing here with this divergence. Price hasn't yet started to fall apart, yet I see the momentum has been lost, the momentum is lacking. And so this is the big picture that I'm seeing here. I think we made a lower low. I see we made a higher high next. So clearly the trend currently is no trend at all. Lower low, higher high. That's not really something that I'm looking for. And I get that bearish divergence. Bearish divergence because price made still a new higher high, but it's an early warning sign that something might not be quite right. So how does this help me to initiate a position here in that market, potentially? I'm looking at the daily chart. I don't want to trade that daily chart right now because the big picture here is still likely to the upside, but I saw so many warning signs, so many things that I don't like about the chart formation. That's that recent price action here that makes me think on the shorter term, probably there might be more opportunities on the short side. Shorter term, short side. Yeah, play of words, sorry about that. Let's have a look at the lower time frames. 4-hour chart, I start to see the price is clearly starting to push lower. I start to see that my moving averages are now falling back into place slowly for a move to the downside. The 10 is already below the 20 and the 50 will soon be above the 20 here as well. Let's drop down further with our time frames. Let's have a look at the 2-hour chart. Here it's now a clear downtrend on the 2-hour chart. I hope you guys can see how those different time frames are connected with each other. I saw the big picture on the daily chart. I saw the red candle. I saw the divergence. Something was not quite right. And now I start to see that the 4-hour chart has started to move lower. I see that the 2-hour chart has started to move lower. And the 2-hour chart is currently pulling back here towards our moving average sell zone in a downtrend. And the idea might be that maybe here in this area somewhere, there could be a potential short opportunity waiting for us and setting up. Now, what might be such an area? Let's have a look at our level tools. There is always, here's the horizontal line. The idea is that I'm always looking for areas that might be interesting for price. What is a price level where price has reacted to previously in the past? And this area of round about 123 immediately jumps to our attention here. You can see that price has reacted to this level here in the past and there, and another touch there. Other reactions here. 123 is something like a round number, not perfect, not a big round number, but it's definitely something obviously where the market said in the past there might be some kind of support and resistance area waiting here. So 123 could be a potential target for a move to the downside. Do I think that I want to potentially short this market here right away? No. Why? I see that it's a downtrend. I see that the other higher time frames give me that same story. The market might be going lower. If I want to buy something, I don't want to buy it at any price. I want to buy it at a good price. I want to have a good deal. I want to have a good trade location. Same thing is true if I want to sell something, real estate, for example. I don't want to sell at any cost. I know which price I want to have in order to have a good deal when I want to sell my home, for example. And the idea here is, where is here an area of good, where's a good price location? What is a good deal here? Well, I'm using my 10 and 20 period moving average here in order to help me identify such a possible price level. And I'm also using, once again, my moving averages here. Sorry guys, my level tool. And I'm just, you see, I just picked that line and I'm looking now for areas, okay, where has something happened in the past? And I think that this price area round about here looks rather interesting. Several price reactions here in the past, a little bit there, a little bit here as well. So this might be a possible target here. This would be sitting right here in my moving average sell zone. So the idea now for a potential setup is I would be waiting now for price to retrace closely to this area here. And there I would be looking for a potential short opportunity with then a profit target which might be reachable here in this area. That's my basic thought process. How do I approach a trading opportunity? I don't just have a look at the daily chart or no chart at all and just think I want to be long a market, I want to be short a market. I try to build my case. I see something on the daily chart, I get the basic idea of where I think that market might be going. Once again, I don't have a crystal ball. I can just stack the odds in my favor, which means with all the analysis that I've performed, every little aspect that I've identified helps me to make a positive trade outcome for me a little bit more likely. Please note, I said more likely. I never know for sure if that next trade will be a winning trade or a losing trade. I will never be able to tell that in advance. I could get the most perfect setup and it could still be a losing trade. For that reason, it's really, really crucial to have an idea how I approach risk management and proper position sizing. Now, on the 2-hour chart, we see this pullback going on. Let's have a look a little bit lower here on the 1-hour chart. And you can see maybe that this area here becomes a little bit more apparent and pronounced here. That level definitely makes more sense. We would have moved way beyond here. But on the other hand, that 50-period moving average here might give us a little bit more background and support area here. Now, let's go back to the 2-hour chart and think that ultimately we want to see the price is going to hit that level. Once again, that setup is not here yet. I have to wait it. We like to call it here a trade with position to stalk a market, to stalk a setup. We know what we're looking for, and only once we get it, then do we raise our order. Currently, this is pretty much here. Where is my mouse? Here it is. This currently is pretty much in no man's land. You can see price is currently pulling back. I think there's still room left for that potential correction here. And I only want to enter a short position here once I see that price starts to move lower on the next leg. Why only a short trade? Because here on that chart, we are currently in a downtrend. The daily chart gave me the idea this market is going lower. So I have stacked multiple time frames in my favor. And if I think price is pulling back, people will tell me now, Philip, I could also be trading that retracement. I could be initiating a long trade here. There is nothing wrong with that idea. You just have to be aware that in that case, you're currently swimming against the current. Apparently, the big market factors are telling you, I want to go lower. I'm looking for lower prices. This is just a short reaction. You can trade that reaction, but I feel that you are trading against the big market move, against the big major direction of the market, and you're taking additional risk. What I think is a more relaxed and more probable way to approach that situation is wait for the pullback to finish, look for a level where you can say, okay, it looks like price is turning now, and then jump into the river and let the big mighty current carry you towards your trading goal. I hope that analogy here makes sense. Let's have a quick look here at those Nadex contracts. We're looking at euro against the US dollar. And once again, I wouldn't be trading this right now. It's just for now an example to show you guys how we could approach proper risk management. What am I trying to trade here? I think price might be still going lower to hit this 123 level. How could I approach that? Well, I want to sell potentially, and again, this is not a trade recommendation. This is now just really for demonstrational purposes here. The idea is, I think if price is ultimately going lower, and you see that expiry cycle which I picked still gives me around about 10 hours, 41 minutes for price to actually move in my direction. Remember, this is a 2-hour chart, so with more than 10 hours, I will be able to see 5 more candles here on that chart until that option contract finally settles and expires. I could be looking into selling potentially, let's pick, yeah, I think if that 123 level might be hit, it might be not too bad if I would consider potentially this contract here with a strike price of 123.20. I could be selling this contract now for 84 bucks, one contract. I have a demo account here. That demo account currently has $24,635 in it. My approach to risk management is I want to risk 1% of my account on any one given trade, which means I could have many losing trades in a row without actually wiping out my account. I want to stay small. I want to have a firm grasp on my risk. And that's the beautiful thing about Nadex contracts. I know upfront how much money I can lose. Let's just consider selling one contract here. You can see immediately, I clicked on this up spinner button here for 60, and I see my maximum loss would be $16 on one contract. Why? I'm selling something now for $84. And if things don't go my way, I have to settle this contract for 100 bucks. And for that reason, I have to pay 100. I got 84 up front, so my maximum loss would be 16. My maximum profit, on the other hand, would be 84. Sounds like an awesome reward to risk ratio, and it is. But keep in mind, price has to travel quite a bit. Price has to come down here to this 123.20 level at expiry. It has to trade below that price level at expiry in order for that contract to settle. Now, proper risk management. My account here, 24,000 virtual dollars. How much is 1% of that money? $246. So what I can do now is just I increase my number of contracts here until the maximum loss that I see here is just, and you see this one here is just a tiny bit over. So let's play it safe. I would be staying now with 14 contracts. My maximum loss would be $231, which is around about 1% of my account value. And this is how I would approach my position sizing and how I would be trading this. Once again, I submitted that order just for demonstration purposes. It's not a trade recommendation for my own trading account. I would wait until I get this setup and that confirmation candle here. And then I would have to reassess reward to risk ratio. I would have to assess the probabilities of that trade. This was not just a mere demonstration on how to place a trade and my logical approach on how I do my position sizing to be in line with my risk management parameters. All right, guys, this is euro against the US dollar. I hope I was able to build my case here. Let's have a look at the S&P 500. If it's working. It's working. All right, let's go back here to the daily chart. The big question is, has the crash been canceled? You can see those small candles all the time while price was itching higher. And again, you can see we got pullbacks. Where did those pullbacks go to? They went here to our moving average buy zone, and they continued. Price established something like a level here. And sure enough, when price came crushing down, see where those levels, where these retracements actually stopped. They stopped right at that same level. Horizontal levels of support and resistance are very, very powerful things. They're incredibly easy to draw in. You just one touch, another touch, and there you go. And they stay on your chart. Why is technical analysis working? Or why do I think that it's working? The guys at university will tell you price is just a random variable. It follows a standardized normal distribution, random walk theory, and so on. I don't think that that's the case, because my assumption is what I'm seeing here might be price, but that price is not an independent variable. That price is the result of market participants acting in the market. Those candles, that price action is the result of all their emotions, all their analysis, all their fear and greed in the market. And you can see that if those market participants have reacted to that price level here, 2,700 points in the S&P 500 in the past, they probably have built their positions around those levels. Here, probably they started to go short. At that level, maybe they started to go long. At least they have positions. They paid attention to that price level in the past, and this is why they will why they will pay attention to that price level also in the future. It's just a matter of their psychology, of their past positions and their current positions that they're holding, which is why those levels stay on my chart. The market reacted to those levels before, it will do so again. Very, very decent probability. So the idea here is, of course, price immediately dropped lower, and once again, see how price got higher, and those candles started to get a little bit larger here, but nothing compared to the size of those candles when price actually started to drop. You can see a lot of fear in the market. That's usual. Price going upward is combined or is associated with low volatility. Price coming down, usually things fall apart pretty fast. High volatility. Let's have a look at the VIX, the VIX here. The VIX, I don't want to confuse you guys, but this is a measure of fear in the market. How is it calculated? Well, the CBOE actually takes all the information about the about a certain set of options on the S&P 500 and calculates the implied volatility here. And you can see that once that crash actually started, volatility levels spiked high. Volatility shot up and it came down. It came down again significantly. But please note, we are still round about at 2 times the level where we have been previously, which is why options and option pricing has become more expensive. You will note that in the pricing of options, also on those contracts here on Nadex, that you will have to pay more for your volatility. So this is just a quick excursion here to show you guys that it makes sense to have a look at the VIX to understand what volatility has been doing there in the past. Let's come back here to the S&P 500 directly. Price was able to break above this level again. And now what do we see here? Let's make it larger. Bullish candles, bearish candles, indecisive candles, more bearish candles. Those candles here started to turn bullish. Please note the longer, lower shadows here. And what we're seeing here again are indecisive candles. Why are those candles indecisive? Well, the upper and the lower shadow are pretty much have the same size. We can see that the body is pretty much small and is also located rather in the middle of that candle. Currently, just looking at that price action here, I think that there's a decent chance that price might come back to test a certain low. Which low would come to mind right now? Well, guess what? We have this level of 2,700 sitting here. If I had to make an idea, if I had to trade this market, once again, that's not a setup that I'm looking for. I could be looking here on lower time frames to see if something might be setting up here for potential short trading opportunity. Why short? Because I think that there's a decent chance that this 2,700 level might be tested once again in the near-term future. Once again, I built my case. I have the big idea about what might be going on here, but I think that this level here currently is rather attractive. And although the market seems to be trending higher here, I think that a retest of this level over the next few days wouldn't be unreasonable. Let's put it that way. And let's make also have a look here. You see that move here to the downside was pretty large. But again, let's put that into perspective. Let's have a look at the weekly chart. And just see on that weekly chart, we just really fell back to the 50-period moving average. Again, a deep pullback here, but really nothing pretty much out of the ordinary here. And we're sitting here right with the weekly candle pretty much in the buy zone. Way too large here to consider a trading opportunity here based on that candle for our trend flow strategy. But if we put this into perspective here on the monthly chart, guess what? Currently, we haven't even corrected here back into our moving average buy zone. So if everybody has been talking about the crash and that huge move to the downside, guess what? Here on the monthly chart, it pretty much didn't happen. We are still currently, again, overextended from those price equilibrium levels. So currently, it's not really that, I wouldn't call this a crash at all. Would I be comfortable to enter that market again on the long side? No, I wouldn't, because I think we're once again here overextended, and there isn't really that much to fuel that rally. At least that's my perspective and my approach. Guys, I want to briefly, as time is already running up and I'm running out of time, let's have a brief look at gold here. Gold has seen some kind of nice move to the upside here recently. However, once again, what is the trend? Well, we made a high, which is a lower high. We made a low, which is a lower low. We made a higher high. So currently we have a lower low, a higher high. Once again, it's not really clear what's going on here. One thing to note is, once again, this high here is clearly showing divergence here in the market. And if we start to actually zoom out here and have a look at the big picture of where we currently are with gold, we start to see that essentially we are in a pretty big trading range, and those levels here, and this is actually good enough to actually see where the market currently is and what those levels are. It doesn't have to be that precise if you're so far zoomed out, but pretty sure if we don't really clear this area here above $1,360 per troy ounce, I feel the market has a really hard time to actually push higher here. And until then, I feel that we'll see a lot of range-bound price action here. And once again, you see how easy it is to put those levels in here. Closing counters here, touches there and there and there again, and here on the left side of the chart. Put those levels on your chart. If there was one thing I could do going back in time, I would tell myself, Philip, start using those horizontal levels. They are truly powerful things. All right, guys. Let's briefly jump back here to our slide and show the last slide of the session. I showed you how I analyze the markets. I also showed you how easy it is to place a trade here on the Nadex platform. And yeah, guys, if you haven't signed up and have become a member of the exchange yet, please consider signing up for that demo account. Here the slide says still 14-day demo accounts, but guess what? Those demo accounts are now unlimited, so even more benefit for you guys, even more time to play around, get used and practice to the platform, to the contracts, both spreads and binaries. And I only can recommend you guys get accustomed to the platform and learn as much as you can about analyzing and trading those markets. All right, that's pretty much a wrap from me for today. Thank you very much for tuning in once again. I hope you liked today's content. Kirby, thank you much for the feedback. Really appreciate it. Yeah, I would really love to welcome you guys again during one of our next webinars. And any other feedback that you might have for us, please let us know. We're running those sessions for you. And yeah, we want to give you guys the content that you came here for and that you're looking for. So once again, for me, it's been a pleasure. Thank you very much for attending. Now to all of you, a very happy next trading week, and catch you again soon. So thanks again and take care and bye-bye.